Good morning. This is Larry McMillan with a market update on Monday, November 9th, before the market opens. Well, the market is skyrocketing this morning after Pfizer announced last night from Germany they've been working on the COVID vaccine with a German partner, that to have a successful vaccine. It was proven 90% successful in the phase 3 trials. So I shouldn't say phase 3, in the drug trials. So the market was already up before that, and then it added another 100 S&P points or so after that. So we're at new all-time highs easily by quite a good distance, frankly, almost 100 points, and really can't fight that trend. So the indicators are going to be subsidiary to that. I don't really know how things would play out in the future. Usually with this kind of news, there's a sell on the news sort of thing. Obviously not this news, but there may be some back and forth, um, conditions going forward. Maybe the delivery problems, or I don't really know what. But let's just look at the indicators as they are right now. S&P obviously now being at a new all-time high, has a huge gap all the way back down to the previous all-time high. So there's a possibility that that gap would be filled, or there would be a retest. But the chart obviously turns positive with a move to new all-time highs. The equity-only put-call ratios, though, are still at very low levels because call buying has never really backed off all through the summer, the fall, and we're at levels that are lower than in January and February of this year when the market was extremely overbought. So the call buyers have been proven to be right, essentially, and that's unusual. But for right now, since the put-call ratios are still at low levels, the weighted ratio kind of turned down a little bit, but the computer analysis still says that these ratios are moving higher, and so because they're already so low. So that's a sell signal. Breadth has been one of the best indicators, and the breadth oscillators are positive, even though breadth was slightly negative on Friday. The breadth oscillators stayed on the bullish side, and obviously there's going to be very positive breadth today. The cumulative volume breadth, CVB, that we talked about previously had been during most of October had been saying S&P would move to new all-time highs, so that's been proven right. The new highs versus new lows, recently new highs have jumped back ahead of new lows, so that indicator was bullish as well. So that leaves us just with volatility to discuss, and VIX is only down $1.20 on this huge upward move this morning. Now, a move of this size and a possible even a 50% retracement of back towards the new all-time highs, or the previous all-time highs, would cause realized volatility to be quite large. So that's helping to boost VIX because, I mean, obviously, usually when the market goes up, VIX goes down. There's special circumstances at work here. I don't know what kind of things the election still has an effect on the market, but the volatility that was present prior to the election is still pretty much in the market, and it extends out into January. So if there are legal issues or something that extend out that long, I don't really understand, though, who'd still be paying up for those puts, but obviously they are at this point in time. So VIX is elevated, but it's back in a generally bullish mode. We had the VIX spike peak buy signal. We had the VIX crossover buy signal. We had both of those in the last couple of weeks. And now VIX and its 20-day moving average are both below the 200-day moving average, which is also positive for VIX. So all those things will stay in effect. I would suspect that as time passes here, VIX will begin to dwindle now, getting back towards the old depressing levels of 12 to 14 or something like that, which is no fun for traders when it gets that low. In any case, that pretty much summarizes things. If you're long bull spreads, I would suggest you roll them up to be at the money spreads, still using spreads because VIX is so high. And, we'll see how things develop from here. We have a Saturday webinar coming up in 2 weeks on November 21st, where we're going to be discussing intermarket trading. And there are some intermarket spreads that are setting up now, including one in natural gas and crude oil that we usually talk about at the end of the year. So, heating oil, I'm sorry, and natural gas. So visit our website, take a look at our products. Newsletters are still doing well, and there's really quite a few opportunities in this market besides just being outright long. With volatility being this high, there are definitely some things to look at. So good luck, and have a great week trading.